Welcome back to the Profitable Mindset Podcast, everybody. You know, it's a question I'm sure a lot of us have thought about. Is financial freedom like truly possible for everyone? Or is it just this fantasy that's only for, the lucky few? Today, we are going to try to unpack this whole thing and see if financial freedom is actually a realistic goal, even, for the average person.
Yeah, it's a really great question. I think it's super important to maybe kind of rethink how we even see financial freedom to begin with. It doesn't have to be about tons of money and luxury, although, those can be a part of it for some.
Exactly. I think the real heart of it is more about choices, right? And having control over your own life.
You got it. It's like getting your income and your expenses and investments all lined up to support whatever your best life looks like. And it's not even just stuff, right? It's about having that feeling of peace, knowing you're the one in control of your time and your future.
Make total sense. A lot of people get scared off by the whole financial freedom thing because they think it's all about, never having any fun and just constant sacrifice.
Yeah, that's one of the biggest things that trips people up. It's a total myth, though. Financial freedom isn't about going without. It's about making smart choices that fit with what you care about and your long-term goals. You should definitely have room for fun and experiences in your plan. It's about that balance.
Okay, so we've busted that myth. It's not about being miserable and cheap. But what about the actual money part? Do you got to have millions to be financially free?
Not at all. Look at John from the research we did. He got to financial freedom through real estate, but he didn't inherit a ton of money or win the lottery or anything. He just used his income strategically, invested in rental properties, slowly built up this whole portfolio that made enough passive income to cover all his expenses. He shows that regular people can do this if they have a good plan.
That's actually really encouraging. Understanding those different stages of financial growth is important too, right? Breaking it down into smaller steps makes it way less scary.
For sure. It's not like sprinting, it's a marathon. Financial freedom, I mean. But you've got these checkpoints along the way. The first one's, financial stability, like your income covers the essentials, and you've got a safety net for if something unexpected happens.
Gotcha. It's about getting that strong base first. What's after that?
Once you've got that, the next big thing is tackling debt, especially the high interest kind, like credit cards. Getting rid of that frees up so much mental energy and money that you can put towards, actually building wealth.
Yeah, it's got to be hard to focus on growing your money when you're stuck trying to get out of debt.
Exactly. So then the next stage is building security, right? This is where your emergency fund gets even bigger.
Right.
And you've got things like insurance, even more savings, and maybe you're starting to dip your toes into investments. As you go through this stage, you'll start to feel more flexible financially. You're not just living paycheck to paycheck anymore, so you've got more options.
Yeah, you've got more control over what happens to you, right?
Totally. And finally, all this leads to the big goal, real financial freedom. This is where your investments and passive income are covering all your bills indefinitely.
That's quite a journey. But it's kind of cool how it all builds step by step.
Yeah.
Speaking of building, we got to talk about the boring but important stuff, right? Budgeting and saving. Can't get around it.
No, it's essential. Budgeting isn't about limiting yourself. It's about understanding where your money actually goes and, making choices that are in line with what's important to you. It's like giving yourself the power to use your money for the stuff that really matters.
There's so many different budgeting methods out there. The 50-30-20 rule is a popular one, right? 50% needs, 30% wants, 20% to savings and paying off debt.
It's definitely a good place to start for a lot of people, but, it's just one way to do it. There's also zero-based budgeting, where you got to account for literally every dollar, the envelope system, where you use cash for different categories, and even that pay yourself first idea, where you prioritize saving right off the bat. The key is trying stuff out and figuring out what works best for you and your life, There's this story of Sarah from one of the things we read. She really shows how powerful budgeting can be if you do it consistently. She paid off all her debt and started investing, all because she made, small but really smart changes to her spending.
I love that story. Shows you don't have to live like a monk to budget. It's about making space for the stuff that matters, including your financial future, right? So once you've got the budgeting and saving down, what's next? Putting that money to work for you, that's where investing comes in.
Exactly. That's how you beat inflation and grow your wealth over time. Investing can seem kind of intimidating, but if you understand the basics, it's a game changer.
Where do you even begin with that? There's so much info out there. It can be overwhelming for sure.
You got to start with those different asset classes. There's stocks, which means you own a tiny piece of companies, and bonds, which are like, loans to the government or companies. And then there's real estate, commodities, things like gold or oil, and even alternative investments like cryptocurrencies and private equity. They all have different levels of risk and potential return. So the trick is to spread your investments out. Don't put all your eggs in one basket. Helps reduce risk and build a stronger portfolio that can handle ups and downs.
That makes sense. Spreading things out is always a good idea. And that ties into risk management, right?
Yeah.
Protecting your money, making sure your investments are lined up with how much risk you're comfortable with.
Exactly. Risk management is all about protecting what you've earned and making sure you're not losing sleep over your investments. And there are different approaches to investing, right? We've got the active trading, which some folks are really drawn to, and then the long-term investing. Both have their pros and cons.
Active trading seems super trendy right now, the promise of quick profits and all that. But you got to be realistic about the risk involved.
Yeah, active trading, it takes a lot of time. You got to know what you're doing, and you got to be disciplined. It's definitely not for everyone, and it's not a get-rich-quick scheme. You've got different styles, like day trading, which is buying and selling all in the same day. Swing trading, which is holding on to stuff for, a few days or weeks. And then scalping, which is like trying to grab tiny profits from tiny price changes. The potential reward is higher, but the risk is way higher, too.
It seems like some people jump into active trading thinking it's this shortcut to financial freedom, but it's not that simple.
You got it. No matter what style you're doing, you got to be on top of your risk management game, protecting your money and making sure that even if you have losses, they don't totally mess up your long-term plans.
For people who are drawn to that faster pace, it's so important to do the research, understand the risks, and have a solid plan for managing that risk. For a lot of people, though, the long-term investing approach, with its focus on patience and consistency, might be the better way to go.
Absolutely. If you're in it for the long haul, you got to build a portfolio that can weather the storms, the market going up and down. Asset allocation, that's figuring out what percentage of your money goes to different types of investments. That's super key. You've probably heard of the 70-20-10 rule. That's 70% in stocks for growth, 20% in bonds for stability, and 10% in cash so you can, access it easily.
That sounds like a good starting point.
Yeah.
And you can adjust it depending on your risk tolerance and what you're trying to achieve.
Right. Exactly. And speaking of security and resilience, let's touch on risk management for those long-term investors. It's not just about avoiding losses. It's about that peace of mind, knowing you've done what you can to protect your money.
What are some of the key things people can do to manage risk well in those long-term portfolios?
Well, diversification, like we talked about, that's your base. Then you've got things like stop-loss orders, which automatically sell a stock if it drops to a certain price, prevents you from losing even more, and the 1% rule, where you don't risk more than 1% of your total capital on any single trade. These are practical things that can really help protect you from those big market downturns.
It's like having those safety nets in place, right? Now, let's shift gears and talk about what I think is one of the most exciting parts of investing. The power of compounding and passive income. This is where you can really see those consistent actions pay off over time, leading to that effortless growth everyone dreams of.
Yeah, it's like magic letting your money work for you. You make those small, steady investments, and thanks to the power of compounding, they can turn into, a serious amount of wealth over the long term, like a snowball rolling down a hill, just getting bigger and bigger. Imagine you invest just $100 every month, and you get a 7% return on that. Keep doing that for 30 years, you'll end up with over $100,000. And that's just from those small, consistent contributions.
That's amazing. It really highlights how important patience and consistency are when it comes to building wealth through investing. And, with all the technology we have nowadays, there are more tools than ever to help people manage their money and get the most out of their investments.
For sure. Robo-advisors, for example, they're like automated portfolio managers. They make investing easy, even for beginners. And there are tons of apps that make it super simple to track your spending, invest in the markets, and even learn about different financial products. Technology is a game changer for anyone who wants to, take charge of their financial journey.
It's like having a personal finance expert right there in your pocket. But we can't forget about the human side of things either. Even with the best laid plans and all the fancy technology, we're still going to face those psychological barriers that can trip us up. Fear, greed, following the crowd, those emotions can push us into making rash decisions that completely derail our long-term goals.
Yeah, you hit the nail on the head. We can have the perfect plan, but our emotions can still take over, especially when it comes to money.
So how do we tackle that? How do we become more aware of those emotional triggers and start building a healthier relationship with money?
The first step is just being aware. Think about your own relationship with money. What are your core beliefs about wealth? Where did those beliefs come from? What are you most afraid of when it comes to money? Understanding those deeper emotions is the first step to dealing with them.
Like uncovering those hidden scripts that are playing in our minds and affecting how we handle money.
Exactly. Once you understand them, you can start coming up with ways to manage them. Journaling, like we talked about, is a great way to track your spending and figure out what triggers you emotionally. It can help you see those situations that make you anxious about money or those spending habits that pop up when you're stressed or feeling down.
Like becoming more mindful of our automatic reactions so we can make better choices.
Exactly. And you don't have to do this alone. Talking to friends, family, or even a financial therapist can help you work through those deeper emotional issues. For those who want to go deeper, we'll have some resources in the show notes. There are some really good books and articles out there that get into the psychology of wealth and offer practical tips on how to develop a healthier mindset around money. I'm glad you mentioned that. Managing your emotions is just as important as managing your investments when it comes to achieving financial freedom. It's all part of a holistic approach.
Speaking of expanding our horizons, let's talk about real estate and alternative investments. Looking beyond the stock market can be appealing for those who want to diversify and potentially earn higher returns.
Definitely. Real estate, for instance, can give you rental income, potential for the property to increase in value, and some nice tax benefits. It's a great way to diversify and build passive income.
What about other alternative investments like commodities, cryptocurrencies, and private equity?
Those can be interesting, but they also come with higher risks and usually require more specialized knowledge. Commodities are raw materials, things like gold, oil, or agricultural products.
Yeah.
Cryptocurrencies are digital currencies, using that blockchain technology. And private equity is about investing in companies that aren't publicly traded. They might offer higher returns, but do your research and understand the risks before jumping in.
It seems like there are so many paths you can take to get to financial freedom. But I want to shift gears a bit now and talk about something that goes beyond personal finance, creating a legacy. It's about thinking bigger than just accumulating wealth for yourself. It's about the impact you want to make on the world and on future generations.
That's a powerful concept and one that often gets overlooked. Legacy is about what you value, what you want to be remembered for, and how you use what you have to make a positive difference. It goes way beyond just the money.
It could be through charitable giving, supporting causes you care about, mentoring others, sharing your knowledge, or even just teaching your kids about financial responsibility.
Exactly. It's about using your wealth and experience to create something that lasts beyond your own lifetime.
It's like the ultimate expression of financial freedom, right? Once you've reached that level of security and abundance, you have the freedom and resources to focus on something bigger than yourself and leave a positive impact on the world.
I love that perspective. It reframes financial freedom as something that's not just for you, but something that can make a real difference in the world. Building on what we were just saying about like the emotional side of money, let's switch gears for a second, talk about something that often gets kind of pushed aside in financial planning. It's this whole idea of creating a legacy, thinking beyond just your own wealth and considering, the impact you want to have on the world, on future generations even.
Legacy planning. It always sounds like something only, super rich people need to worry about. But I think it's a really powerful concept that anyone can think about no matter how much money they have.
I'm totally with you on that. Legacy, it's about figuring out what you stand for, what you want people to remember you by, and how you use what you've got to make a positive difference. It's way more than just like dollars and cents.
It's about things like giving to charity, supporting causes that are close to your heart, being a mentor to others, sharing your knowledge and skills, even just, teaching your kids to be smart with money.
Exactly. It's using your experience and your wealth to create something that lives on even after you're gone, like weaving your values into the future.
Yeah, that's a great way to put it. It's like the ultimate goal of financial freedom, right? Once you've got that security and abundance, you've got the power to focus on something bigger than yourself and leave a positive mark on the world.
I love that. It's not just about you. It's about making a real difference. So let's go back to that big question we started with. Is financial freedom really possible for everyone?
That's a tough one. I mean, we've shared some pretty inspiring stories and talked about practical steps you can take, but we can't ignore the fact that there are like these systemic barriers out there that make it a lot harder for some people. Things like income inequality, not having access to good education, and just plain bias. Those are real obstacles that can make it really hard for people to even get to a point of financial security, let alone freedom.
Right. We can't pretend those things don't exist. It's important to acknowledge that not everyone starts from the same place. Some people have to overcome way bigger hurdles just because of the circumstances they were born into. But, I still believe that if you have the right attitude, the right strategies, and the right support, financial freedom is possible for way more people than we might think. It might take longer, you might have to be more creative and resilient, but it's definitely possible.
It's so important to share those stories of people who have beaten the odds and reached their financial goals. Those stories give hope to people who might feel discouraged or overwhelmed. We've seen so many examples of people who defied all expectations and got to where they wanted to be financially. And they did it through hard work, determination, and being willing to learn and adapt.
Definitely. And while we're working towards changing those bigger systems that create these barriers, it's important to focus on what we can do as individuals too, right? We can educate ourselves, build good financial habits, and support others who might be facing bigger challenges. Every step we take towards our own financial freedom can help create a more fair and prosperous future for everyone.
And remember, even small, consistent actions can make a big difference over time. The important thing is to start, keep learning, and never give up on that vision of financial freedom. We've covered so much today, from practical tips to the mindset shift you need to make. But before we move on, I want to bring up one crucial thing we talked about earlier: how our emotions and psychology affect our relationship with money.
Yeah, it's something that often gets ignored, but our emotions play a huge role in how we handle our finances, often without us even realizing it.
Our thoughts, our beliefs, even our past experiences with money, they can all have a big impact on the financial decisions we make. Sometimes we end up making choices that aren't actually in our best interest.
Right, like those hidden scripts playing in the back of our minds, driving our choices without us even knowing it.
Wow.
Fear, anxiety, past money troubles, they can really influence our behavior.
So how do we change that? How do we become more aware of those patterns and start building a healthier, stronger relationship with money?
Self-awareness is key. Take some time to really think about your own relationship with money. What are your deepest beliefs about wealth? Where did those beliefs come from? What are your biggest financial fears? Once you start understanding those underlying emotions, you can start dealing with them. It's like shining a light on those subconscious patterns, bringing them out into the open.
Makes sense. Once you've got that awareness, what are some strategies for actually managing those emotions?
Journaling, like we mentioned before, can be really helpful. Track your spending, see what triggers you, figure out what makes you anxious about money or what spending habits show up when you're stressed. It's about being mindful, noticing those automatic reactions so you can make better choices. Journaling helps you become more aware so you can make choices on purpose instead of just reacting. And, you don't have to do this alone. Friends, family, even a financial therapist, they can all be a huge help when you're dealing with those deeper money issues.
Having that support system is so important. And for anyone who wants to dive deeper into this, we'll have some resources in the show notes. There are some great books and articles that explore the psychology of wealth and offer practical advice on how to build a healthier relationship with money.
Absolutely. Taking care of your emotions is just as important as taking care of your investments when it comes to reaching financial freedom. It's all part of a holistic approach.
Speaking of being holistic, let's talk about something that often gets overlooked: financial literacy. It's about having the knowledge and skills to make good financial decisions.
Financial literacy is essential for navigating the world of money. It's knowing the basics of budgeting, saving, investing, managing debt, even things like insurance and estate planning. It's about being a smart consumer of financial products and services, protecting yourself from those predatory lenders, and making choices that align with your values and long-term goals.
It's like having the right tools to build a solid financial foundation.
Exactly. And there are more resources than ever to help people improve their financial literacy. Books, podcasts, online courses, workshops, even financial advisors. It's about finding what works for you and putting in the time to learn.
It's an investment in yourself that will pay off for your entire life. And as we've been saying, getting to financial freedom is a journey, not a destination. It's a process of constant learning, growth, and adapting.
That's a great point. It's not about hitting some financial target and then just coasting. It's about building good habits, staying informed about how things are changing in the financial world, and always looking for ways to improve.
And like any journey, there are going to be challenges and setbacks along the way. But the important thing is to see those as opportunities to learn and grow, not as failures.
Right. It's about being resilient, learning from your mistakes, and changing your strategies when you need to. Remember, it's rarely a straight line to financial freedom. There will be detours, unexpected expenses, the market going up and down, things that can throw you off course.
That's where having a solid financial plan and a resilient mindset really comes in handy.
Totally. Your financial plan is like your roadmap, guiding your decisions and keeping you focused on your goals.
And a resilient mindset helps you deal with those bumps in the road without getting discouraged or giving up on your dreams.
Absolutely. Remember, it's not just about the numbers. It's about building a healthy relationship with money, making choices that match your values, and using your resources to create a life that's abundant, full of choice, and has a lasting impact. Now, before we wrap up, I want to emphasize something really important. Taking action. It's easy to get caught up in just learning, reading books, listening to podcasts, going to workshops, but knowledge without action is like a car without an engine.
You got to actually take that first step, even if it's a small one, and then keep building on that momentum. It's about turning what you know into what you do and moving towards your goals consistently.
Right. It's those small, consistent actions that add up over time, whether it's setting up automatic savings, paying off debt, or investing. Even small things, if you do them regularly, can lead to big results.
It's like working out a muscle. The more you use it, the stronger it gets.
I like that. Building financial strength takes time and effort, just like building physical strength. It's a journey that requires patience, sticking with it, and always being open to learning and growing.
We've talked a lot about the internal stuff, the mindset and all that, but we can't forget about the external factors that can affect our finances too. Things like the economy, interest rates, inflation, even what's happening in the world politically. Those can all have a big impact on our financial lives.
You're right, we're not in a bubble. Our finances are affected by a whole web of things. It's important to stay informed about those bigger trends and adjust our strategies when we need to.
Be proactive. Take steps to reduce potential risks, but also be ready to jump on opportunities when you see them.
Exactly. For example, when inflation is high, you got to think about investing in things that can keep up with it, like stocks or real estate. And when the economy is shaky, it's a good idea to focus on building up your emergency fund and paying down debt.
Be flexible, make informed decisions based on what's happening around you. And even though those external factors are important, we have more control than we think.
Totally agree. We can't control the stock market or the global economy, but we can control our spending, our saving, our investments, and how we think about money in general.
It's about focusing on what we can influence and making choices that align with our values and goals. Speaking of long-term goals, let's talk about something that often causes a lot of stress. Retirement planning. A lot of people feel overwhelmed by thinking about a future that seems so far away, but it's never too early to start.
I think retirement planning is about picturing your ideal future and then taking steps now to make sure you have the money to enjoy it, whether it's traveling the world, spending time with family, pursuing hobbies, or just relaxing and having freedom. It's about creating a plan that fits your vision.
And it's not just about saving a bunch of money. It's about your health, your relationships, what you're passionate about, your overall well-being. It's about creating a plan for a fulfilling and meaningful retirement.
Right, it's a new chapter, not the ending. And the sooner you start planning, the more choices you'll have.
So what are some practical steps people can take to start planning for retirement? Where do you even begin?
Figure out what you want your retirement to look like. Once you have that vision, you can start calculating how much money you'll need. There are online calculators that can help you estimate that based on your lifestyle, how long you expect to live, and how much return you think you'll get on your investments.
So once you have a general idea of how much you'll need, you can start making a plan to save and invest to reach that goal.
Exactly. There are things like 401ks, IRAs, and Roth IRAs. It's important to understand how each one works and pick the ones that fit your situation and goals.
Don't forget about compounding either. The sooner you start saving, the more time your money has to grow.
Compounding is your best friend when it comes to retirement. Even small amounts, if you invest them wisely and let them grow over time, can add up to a lot.
It's like planting a seed and watching it grow into a huge tree.
I love that analogy. It really captures what long-term investing for retirement is all about.
Now, let's talk about something that people often avoid thinking about, but it's really important: estate planning. It's about making sure your assets are handled according to your wishes and that your loved ones are taken care of after you're gone.
People think estate planning is just for older folks, but it's important for anyone who wants to protect their assets and make sure their family is taken care of. It involves making a will, which says how you want your stuff divided up, and naming beneficiaries for your accounts, like bank accounts, retirement accounts, and life insurance.
It can also involve setting up trusts to manage assets, making healthcare directives so people know your medical wishes, and even planning your funeral.
Estate planning can be complicated and, emotional, but it's so important to make sure your wishes are respected and your loved ones don't have extra stress and financial burdens when you're gone.
It's about taking control of your legacy and making sure your final wishes are carried out.
Exactly. It's about leaving behind a legacy of love, care, and security for the people you care about.
As we're getting close to the end of our conversation, I want to go back to a theme that's been running through everything we've talked about: how our financial well-being is connected to other parts of our lives.
Financial well-being isn't just about how much money you have in the bank. It's about having that feeling of security, stability, and freedom that lets you pursue your passions, build strong relationships, and live a life that has purpose and meaning.
It's about making financial choices that match your values and using your resources to create a life that's both prosperous and fulfilling.
And it's about realizing that financial freedom isn't a finish line, it's a journey. One that keeps changing and adapting as we grow and change.
It's about embracing that journey, learning from what happens, and using our money to create a life we love.
Well said. And before we wrap up, I want to say, don't forget to celebrate your wins along the way. This is a marathon, not a sprint. Acknowledge your progress and celebrate those milestones that get you closer to your goals.
Celebrating even the small wins keeps us motivated and reinforces those good financial habits that we need for long-term success.
Exactly. Whether it's paying off a credit card, reaching a savings goal, or hitting a new level of financial security, taking a moment to recognize and appreciate those wins can really keep you going on your journey.
Welcome back to the Profitable Mindset Podcast. We've been having such a great conversation about financial freedom, haven't we? From those, nitty-gritty tips to the mindset shifts that can really make a difference.
It has been a fantastic discussion. Hopefully everyone listening is feeling a little more confident about taking charge of their financial future.
I think so. We've talked about everything from budgeting and saving to investing wisely, managing risk, even planning for retirement and what comes after. But I want to circle back to something we said earlier, this idea that financial freedom isn't just about reaching a certain net worth.
Oh,
right?
Absolutely. It's so much bigger than that. It's about having the freedom to, make choices that truly reflect what you value, pursue your passions, spend time doing what you love, and live a life that has, real meaning.
It's about abundance, not just with money, but in every part of your life.
Exactly. And while the path to financial freedom might look different for every single person, there are definitely some core principles that are always true.
Like building that strong foundation first.
Yeah.
Budgeting, saving, and smart investing.
Yeah, and your mindset, right? How you approach challenges and stay focused on your goals, that's huge.
Totally. We've also spent some time talking about how our emotions and past experiences can really affect how we handle money, even if we don't realize it.
Becoming aware of those hidden patterns and building a healthier relationship with money, that's so important.
So as we wrap up this awesome conversation, what are some of the big takeaways you hope people will remember?
Well, first off, I really hope everyone listening realizes that financial freedom is absolutely within reach, no matter who you are. If you're willing to put in the work, learn as you go, and push through those tough times, you can do it. It's not about being lucky or, coming from money. It's about making smart choices and taking action.
It's about believing in yourself and knowing that you have the power to create the financial future you want.
Exactly. And never, ever underestimate the power of your mindset. Believe in yourself, stay positive, and focus on what's possible.
And remember, this whole thing is a journey, not a destination. It's about continuously learning, growing, and adapting as you go.
It's a journey that can change your whole life in the best way.
It can give you the power to pursue your passions, make a real difference in the world, and leave a legacy that lasts.
So take that first step today, even if it seems tiny. Start budgeting, start saving, start investing, start learning, just start.
And don't ever stop believing in yourself and your ability to create a life of financial freedom and abundance. It's been such a pleasure talking about this with you today. Thank you for joining us on the Profitable Mindset Podcast.
Thanks for having me.
We hope you found this conversation helpful and maybe even a little bit inspiring. And remember, your financial future is in your hands. Take control, make wise choices, and create the life you want. Until next time, keep striving for that profitable mindset.